What is up, everybody? Logan here again with another video coming right at you. And today we're going to show you guys what a really close to perfect setup looks like for these zero DTEs that we've been running. We had a really good trade today in the Discord. We'll go over the checklist as always. And super excited to get into this one today. And it was really interesting because the expected move, as you guys can see for today, was 58 points. But we actually opened above the EM high. So the first thing I'm doing, right, is looking for call credits. And we were taking a look at, these 2x EMIs. We were looking at all the other areas that we could have taken a shot at this because there's some really nice statistics that back us up when it comes to looking at how much a market may move in the day. So I do want to say I appreciate you guys for watching another one. And I'm really excited to get into this one. If we hop over to the YouTube, if you guys could leave a like, comment, and subscribe on this video, I'd really appreciate it. You guys have been going nuts lately, up 17.3 thousand views. Super grateful for that. I really do appreciate it big time. If you guys could leave let's see, what emoji should we do today? Let's do a monkey emoji. And I also do want to do a $10 Amazon gift card giveaway. So if you guys leave a monkey emoji below, I'll throw your name in this raffle, and then in a week from now, I'll come back, see who wins it, and then I'll shoot you a message, and I'll get it emailed over to you. So I really appreciate all the support. If you guys could leave a subscribe here, let's try to get to 11,000 by the end of October. I'd be extremely happy with that. But back to the video. So we were taking a look at this in the Discord, and right away, right, market opens, gaps up big. As you guys can see here, 36.45, right? And then if we go back, take a look, that's right at the EM high, right, for your short leg. So right away, we're already exceeding it. That's the EM high right there. And that's what's really interesting is this would be the short leg you would take if you're like, hey, since the EM high is at 36.41 from our previous close, right, you add 58 to 35.83. So we're taking a look at this, and immediately the market starts to move within minutes of this open. Like within 5 minutes, we are already up 20 points. So that's when I took a trade right around when we were chopping around that zone, and we'll hop into it. And as you guys can see, we didn't even break above 36.90. We tried it a couple times, and we just couldn't get above it. And what that shows me there is there's a boatload of resistance, and that the market didn't want to push above a 3% move. And what's really fun is Vance talks about this all the time in the Discord, but a 3% or higher move on the day only happens 1.8 or 1.2, I think it's 1.8% of the time out of all the trading days since 2000, right? Right when algorithmic trading became popular, right? When you have all these algos trading the market versus people and having to call in, and all these computers are moving contracts by contracts over and over. So didn't look like we wanted to break that 36.90. Pretty solid line in the sand. So if we go over to the Discord, you guys can see my call out, which I did here. 37.25, 37.30 for 35 credit. Filled a lot of them there. Then I filled some more for 40. And that was my fills on the day. Now, some of the people in the Discord did get better fills, 50 cents. I think the highest fill was 70 at one point, and that was because of this little bump here. So after I filled around the 3,600, and then some other people got really good premium, even here when we got to 36.90. But we also have to remember, right, if we go over the checklist, our expected move math, right? So by using the expected move math, it put us in a position. If we go back to the main chat, click this back over. Now, by using the expected move and knowing that the EM high is 36.41, right there, what that allowed us to do is automatically look at, all right, what's 2x the EM high, right? And my next thing I want to do is take a deep dive into how often do we exceed 2 times the expected move high versus just 1 times, right? Because we exceeded it to the upside super easily today by open. If you had any call credits on, if you had short positions on Friday, you were most likely stopped out today is what I would assume. So pretty interesting to see here. And then even with that 3% move up, that would have been 3,700, and we 36.95, 3,700 spread, right? big psychological number there and we just couldn't get to it. So what I did was I thought, the chances of a 4% or higher move on the day happens less than 0.5% of the time. So I could justify taking a 37.25, 37.30 and getting my normal amount of contracts I do every time, even though it is earnings week and we have Fed speakers Tuesday, Wednesday, Thursday this week. I was able to justify that risk 37.25. That would actually give us basically a 4% move up, right? Like just short of 4%. Maybe the long leg would have been closer to 4%, but the chances of that, especially exceeding it to the upside, are so low that I just felt so confident. But not only that, we'd have to blow through 2 times the expected move high and then go another 25 points above that. So it's just, to me, that is one of the most ideal setups that you get, because the chances that we go over 2 times the expected move high are very low. The chances you get a 4% day happen less than 0.5% of the trading days. So this was almost a complete home run, perfect setup. And the only reason it really wasn't is just because we are in a bear market and you have those bear market rallies where they can rip your face off, where we had CPI a couple of weeks ago where the market fell 4.3% in a day, right? So there you go. There's a trading day that recently it happened. So 0DTE checklist. Did we have a gap up or a gap down? We had a gap up, which is perfect for call credit spreads, right? Huge gap up. Most likely we go and fill the gap. Today we didn't, right? So expect the gap to be filled at some point throughout the rest of this bear market, where we go back down to this 35.83, which was the previous close, right? Back to the 0DTE checklist. The VIX, pretty steady. You guys could see that thing dropped by open because of the big gap up. Did we exceed the expected move on Friday? I would have to go and double check that. But I'm pretty sure we did, because we finished the day down. We actually started the day up and then fell all the way down through it to the downside. And then we'll pull up the TOS charts as well, like I always do in the video. So everything here was just screaming call credit spread to me, right? Like the VIX decreasing, and then you also have the gap up. So all of that showing a little bit more stability. We had really nice pumped premium still because the VIX is high, but it had decreased quite a bit overnight, and the chances that it continues to decrease heavily are very low. Now, granted, tomorrow we could see the follow through, but just knowing the statistics we know, right? So the expected move math was perfect. The gap up, gap down, the VIX movement was great. And then exceeding the EM, yes, I'm almost 100% sure we did. I would just have to go back to Friday. But it wasn't as to me, these are the big 2-3 things, right? And then looking at the chart, this is just something that's really good to keep in mind. Oh, if I can spell. So we'll pull up the TOS chart. But yeah, that's what's really nuts about this, is we just had one of the most ideal setups if you're looking at this from a statistical standpoint and letting the odds play out. So I did end up calling that out. Like I said, I did not take a put credit spread because I thought the downside risk was too large, because I didn't have an edge on it, right? We could have broke support. We could have ran all the way down and filled that gap, and there's just no premium around that gap fill zone where I felt comfortable having it, knowing that we were already 2 times above the expected move high, right? So that's what's really interesting here for everybody in the Discord. And we had a great trading day today. If you guys do want to come join and trade with us, the link is below. And then if you're either a current member or you don't want to pay month to month, I do discount. I give free months out if you sign up 3 months, 6 months, a year at a time. So it can make it a lot more affordable for you. But that was exactly what my mindset was today. And let's hop into the TOS chart so we can take a step-by-step look at also what the charts and the market internals told us. So now we're in the TOS charts, and the first thing I want to show you guys, of course, is my 10-day 30-minute chart. As we always go over, we're going to maximize the sell. You guys could already see big gap up, right? We went right over the moving averages. And I did assume that we would kind of stick to this level right here, my 195. If you guys haven't seen these before, These are my moving averages, the 10, the 21, the 34-day, the 390s up here, and it's green. And then I have this blue dotted line is my 195. And that's where we've really just been selling. Anytime we try to break above this, it's been such a solid resistance point for quite some time. If we go back, but I've mentioned before, when we get too far away from these guys on the 10-day, 30-minute, we like to come right back to them. So nice chop, right? Big gap up, stood right around, closed right around resistance here. So this made it a bit easier for me today, as I expected, right? We would chop and want to come back towards these moving averages at some point. So pretty helpful here. Of course, there wasn't a perfect setup on this exact chart, like typically there is, right? Like when you get a big break through the moving averages, there's a pretty low shot you break straight back underneath it and then continue down. So really interesting there. You guys could see the volume distribution was just straight up all day, basically no stops, just straight up. And our advanced decline opened at 2,500, which showed that we would get some more buying from our opening candle around 36.40. And we bought up 30, 40 points in the first 30 minutes of the market, like I mentioned earlier. And then our ticks, right? Our ticks are going to help us here. And we knew, of course, right at open. I mean, you're getting 1,800 ticks posting for 1,100. That's just big institutional and retail purchasing. And this market's been interesting because it's just ripping us back and forth, right? So I wouldn't be surprised if tomorrow is red. And then, of course, the VIX, which really didn't get too far crushed, but I did mention it that did also gap down, which really didn't gap down very much. Volatility is still much in the market. And I think that also has to do with earnings this week. So we'll see, right? I know Roblox posted really good after hours just recently, but I did want to dive into the chart, show you guys the internals just briefly. I want to make this video a little bit shorter because I do want to make another really nice in-depth guide. But today was just to show you guys what a close to perfect setup looks like. And, you know, we're in a bear market. The volatility is still very high. So pick your strikes wisely. Showed you guys why I chose those strikes, right? That was part of the 0 DTE checklist. And we went over everything, you know, position sizing. I've gone over that quite a bit in my last few videos. So that's everything that I saw in this trading video today. Like I said, if you guys would like to leave a like, comment, and subscribe, I would greatly appreciate it. And then, of course, if you guys want to come trade with us, the link is below in the description. And I can assist you guys with anything you need. Any questions you might have, just leave a comment below. And don't forget that monkey emoji if you haven't done it already. So that's going to be everything for me in this video. I appreciate the support as always, and we will have some more videos rolling out this week for you.